Banks are in trouble and they're trying to shore up billions of dollars. In today's video, we're going to show you what's happening with the bond market and what your banks are doing behind the scenes.
I ain't gonna give in now, I just gotta live this now. I'm gonna be when I'ma kill this stuff real quick. I'ma go take it to town, cause I gotta be that king in their ring when I'm knocking them out when I'm back with the will. Cause I am just off on the journey, you just know that I'm just going insane.
Warriors, rise. Grand rising, good evening, warriors all over the world. First of all, I want you to take a deep breath. Do it with me. You need to stay calm. This is the greatest time in human history to build wealth. As everybody does the opposite, as everybody looks this way, you should look this way. As everybody is fearful, you should be greedy. And next year, when everybody is greedy in the crypto market, you should be fearful and exiting the market, securing and growing your wealth. This is your one shot, your one opportunity to shift your family's wealth timeline. I'm going to show you why Silicon Valley Bank collapsed and what the other banks are doing right now, trying to shore up their balance sheets. At the end of this video, I put it at the end, so if you don't want to watch it, you can see how we've helped over 6,000 warriors now worldwide get their shit together in the craziest time in human history. It's all about mindset, subconscious mind programming, goal setting, vision board creation, creating principles for your family, join one of the best communities in the world, like-minded individuals rising up. There is no invisible enemy. Nobody's stopping you from being great, okay? This is nothing new under the sun. So let's dive right into this information, okay? So what I'm going to show you is a news clip, and then I'm going to share with you what bond markets do, okay? And we're going to break it down. I want to provide education to you guys, not hype, education, understanding of macro and microeconomics so you can make informed decisions. Be careful with the crypto market right now. It is pumping because people are panicking with banks. It's giving more legitimacy to the alternative to the banking system. So let's watch this quick video and I'll explain to you what the bond markets are doing to the banks.
Dave, looking at this, it wasn't as though the banking side of things was, as rosy as people are now thinking it was before this happened.
Yeah, when you look at the latest filings, and so this is information really from the banks themselves on some of their unrealized losses, for example, right? So what we're looking at here, and this is, again, based on their latest filings, unrealized losses on securities available for sale. That's different from the other bits that they're sitting on. But essentially what we're looking at here, just to give you a sense, right? So the scope is 160 major U.S. banks. And why is it 160? So we've taken a look at banks with assets of more than $5 billion, and that sort of narrows your scope. Total losses, unrealized, again, unrealized as of the last filing.
Okay, these are they have not realized these losses yet. Unrealized losses.
Of over 200 billion. Now, there's the reason why the latest filing is important, because since then, a couple of things have happened, right? The U.S. government coming in and guaranteeing and backstopping some of the funding stress. That's one. There's this massive move up in treasuries. That's number two. And so you look at the loss like this, might actually be not as big already, but it's a reminder of what happens when rates move up and the bonds that you're sitting on go the opposite way as far as value is concerned, right? So when you try and determine why do we see big moves in some names and not others, might have to do with the fact that some of them actually, when you look at, say, loss ratios, for example, unrealized loss to equity ratios are higher compared to others. Here's a list based on their own filings on what that actually looks like. Comerica is at 42%. Now, what do the big banks look like? For example, just to give you a sense of scale, not so much as far as ratio, but absolute value is concerned. Citigroup's at the top, 40-something billion at about 19%. So again, just to emphasize, over 200 billion unrealized losses, latest filings, and that number probably has changed, Rish, given the move that we've seen recently.
Okay, so take a look at this. So Bank of America, JP Morgan, and Wells Fargo, all are going to have the lowest unrealized losses. Bank of America, Ripple, JP Morgan has their own cryptocurrency company, which is Onyx, and Wells Fargo is connected to R3. I don't know if there's a coincidence there, but we'll see.
in treasuries, which obviously tends to benefit given the 100 basis point move into.
Okay, so I want you to hear it from them. So then I'll explain it from my macroeconomic view. But why did SVP collapse? Okay, so SVP collapse came suddenly following a frantic 48-hour or frantic 48 hours during which customers yanked deposits from the lender in a classic run on the banks. But the root of the demise goes back several years. Like many other banks, SVP plowed billions into U.S. government bonds during the era of near zero interest rates, which seemed like a safe bet, but quickly became unstuck as the Federal Reserve hiked rates aggressively to tame inflation. So here's how interest rates. So what happens is, and I want you to provide education around this so you understand what's happening. When the Feds finally shut off the printing machine and Jerome Powell announced interest rates hikes, and you see these massive, and he said he's going to keep raising interest rates to cool inflation all the way through 2024. Well, when you have, so let me explain. So bond yields are significantly higher today, and has been the case in recent years. The benchmark 10-year Treasury bond is top 4% for the first time since 2010. Okay. An unusual yield inversion remains in place for 3-month Treasury bills, paying higher interest rates than a 10-year Treasury note. So let me give you an example of this. So if you have a 10-year Treasury note so when interest rates are low and money is flowing like water, okay, it's much more attractive to put it into a 10-year Treasury bond because you're going to get a much higher interest. But if you're stuck, so all these banks are stuck, not all these banks, many banks, you just saw it, are stuck in 10-year Treasury bonds because interest rates were so low, they could get a nice margin on a 10-year Treasury bond. Well, when interest rates shoot up, bonds go down, the value goes down. So we have all these bonds on their balance sheet because they probably never thought, or they had to have known, right? Or behind the scenes, who knows? So C word hits, everything shuts us down, right? In 2020, everything changes, the yield curve changes. So just to make it simple, just to make it very, very simple, okay? When interest rates skyrocket, bond values go down, okay? So now they're sitting with all this capital on their balance sheets that is decreasing in value. So that's what happened with SVB. I keep saying SVP, that's a banking system. Technology we use in the banking system. SVB, Silicon Valley Bank, the interest rates went up, their bonds went down, and their balance sheet was jacked up. They were trying to shore up 2.5 billion, somewhere around there, in this mismatch, right? And the public panicked and liquidated. So they pulled out the liquidity of the bank, sucked it up. FDIC had to pop in. But this joint statement by the Treasury. So this is what's interesting right now. This is what makes me think the great financial reset is here, okay? Because the Treasury, the Fed is going to step in. I spoke incorrectly. I'm trying to understand this. So FDIC is taking over. They're doing their $250,000 and below in deposits, and then they basically sell the bank. The equity sales, what the uninsured depositors get, the value of that. But they're saying that the Feds are going to do whatever they can to protect the depositors, not affecting taxpayers. So are they going to turn the printing machine back on with high interest rates? I have no idea, but this is kind of what the news is saying. So the Fed's battle plan for inflation is shredded by financial turmoil. So Powell's threat to speed up rate hikes now looks dated. Case for the rate caution is strengthened. Goldman sees March pause. So they're thinking that they may pause rates, okay? They may pause rates because of what's happening, because they have to shore up the banking system. But do you realize this is historical stuff happening right now? The banking system is in a complete debacle. So we'll keep an eye on this throughout the week. They're making my job very easy reporting this information. Again, this is not financial advice. Don't make any financial moves based on what I do it. But it sounds like they're going to protect depositors at all costs, which is a good thing, because if they don't, the whole financial system is going to collapse. I believe they're bringing us into real-time payments, on-demand liquidity, blockchain technology. They're going to put all the assets are going to run through cryptocurrency or a blockchain technology. They're going to tokenize everything, the stock market. And so it's very clear we're in the greatest financial reset in human history, and we get to experience this. So if you're very diligent on what you invest in and you diversify and you hold the line, you do the opposite of everybody else. When everybody's panicking, you're buying. When everybody's celebrating, you're selling. You're going to be in great shape. You sell, secure, then grow again. Sell, secure, then grow again. Very simple strategy I've done over the past 4 years, and it's radically changed my life. So love you guys. I appreciate you. I'm going to show you a video. After you watch the video, we'd love to have you inside the Warrior Academy. It's down in the description down below. You can join for 7 days for free in 2023. Check it out.
System is designed to keep you trapped. 2017, I walked out of a high-paid vice president job because I was absolutely miserable. Working 16 to 19 hours a day because that's what the system taught me to do. And what I discovered through countless hours of meditation, research, reading books, understanding how the millionaires and billionaires operate, the system is designed to keep you trapped. Today, I own multiple companies. I travel all over the world. I'm financially free, and that's exactly why I created this community of like-minded warriors coming together called the 3T Warrior Academy. Now, I don't say this to brag. I'm sharing this with you to show you what's possible for you. Whether you're just starting out or you're looking to take your life to another level, we believe the Warrior Academy has something for everybody. Processes that take you step by step through disciplined, consistent activities, and that's exactly what you're going to get. Our 120-day challenge, all you have to do is open up the app and take it day by day. We're going to take you through the disciplined, consistent activities to take your life to the next level. Within 1 week, you're gonna feel a difference. Within a month, people are gonna notice a change in you. That's how powerful this 120-day challenge is. So if you're truly ready to break free from the old paradigm into a new paradigm of discipline, consistency, great relationship with your family, financial freedom, and learning the pillars of wealth that'll change your life and generational wealth to come, I'm gonna invite you to do our program for 7 days for free. The 120-day challenge has changed over 5,000 warriors' lives worldwide, and we hope to be yours next.
Warriors, let's get your together. Let's go.